A beginner's guide to investing in the stock market. Not sure how to get started investing in the stock market? This guide will show you everything you need to know, from what stocks are to how to pick a broker and start buying and selling stocks. Why investing? When it comes to investing, there are a lot of different options and strategies that you can choose from. But why invest in the stock market? Here are some key reasons. 1. Grow your money. Over time, the stock market has consistently outperformed other investments, such as bonds and real estate. This means that if you invest in stocks, you have the potential to grow your money at a faster rate than with other investments. 2. Diversify your portfolio. By investing in stocks, you can diversify your investment portfolio and reduce your overall risk. This is because stocks tend to move independently of other asset classes, such as bonds and real estate. 3. Get started with a small amount of money. Unlike other investments, such as real estate or collectibles, you can start investing in the stock market with a relatively small amount of money. This makes it an accessible investment option for everyone. 4. Professional management. When you invest in stocks, you benefit from the expertise of professional money managers, who are experienced in choosing which stocks to buy and sell. This can help you maximize your return on investment. 5. Liquidity. Stocks are a very liquid investment, which means they can be easily bought and sold. This makes them a convenient investment option if you need to access your money quickly. What is the stock market? The stock market is a collection of markets, where stocks, pieces of ownership in businesses, are traded between investors. It usually refers to the exchanges where stocks and other securities are bought and sold. The stock market can be used to measure the performance of a whole economy or particular sectors of it. Why investing in the stock market? There are several reasons why people might want to invest in the stock market. To make money. One of the most common reasons people invest is to make money. When you buy shares in a company, you become a part owner of that company, and may see your investment increase in value if the company does well. To get dividends. Another reason people invest in stocks is for the dividends. Dividends are payments that companies make to their shareholders out of their profits. Many companies choose to reinvest their profits instead of paying them out, but some companies do pay dividends, and this can provide investors with an income stream. To get exposure to different assets. The stock market can also be used as a way to get exposure to different assets, such as commodities or foreign currencies. This can be useful for diversifying your investment portfolio. To speculate. Some people also invest in the stock market, as a way to speculate on the future direction of the market or individual stocks. This can be a risky strategy, but if done correctly it can lead to large profits. What is a stock? A stock is a type of investment that gives you ownership of a company. When you buy shares of a company, you become a shareholder. As a shareholder, you're entitled to a portion of the company's profits, if any, and you have the right to vote on certain company decisions. Shares of a company can be bought and sold on a stock exchange. The price of a share is determined by supply and demand. If more people want to buy a stock than sell it, the price will go up. Conversely, if more people want to sell a stock than buy it, the price will go down. The value of a company's shares can go up or down, which means you could lose money if you invest in a company that's not doing well. However, over the long run, stocks have historically outperformed other types of investments, such as bonds and bank accounts. What are the different types of investments? There are many different types of investments you can make in the stock market. The most common type of investment is buying shares of a company, which gives you ownership of that company. However, there are other types of investments, such as mutual funds, exchange-traded funds, ETFs, and bonds. Each type of investment has its own set of pros and cons, so it's important to understand the differences before you start investing. For example, shares of a company can go up or down in value, which means you could lose money if you invest in a company that's not doing well. On the other hand, mutual funds are more diversified, so even if one fund loses money, the others might make up for it. Before you start investing, it's important to do your research and figure out which type of investment is right for you. Is investing right for you? Before you start investing in the stock market, it's important to ask yourself whether this is the right move for you. There are several factors to consider, such as your financial goals, your risk tolerance, and your investment timeline. If you're not sure whether investing is right for you, there are a few things you can do to help you make a decision. First, read up on the basics of investing. This will give you a better understanding of how the stock market works, and what kinds of investments are available. Next, take some time to assess your financial situation. Make sure you have a good handle on your budget and your overall financial goals. Once you know where you stand financially, you can start to look at whether investing makes sense for you. Finally, don't forget to factor in your risk tolerance. This is an important consideration when deciding whether to invest in the stock market. If you're uncomfortable with taking on any risk, then investing might not be suitable for you. However, if you're willing to take on some risk in pursuit of potential rewards, then investing could be a good fit for you. How to invest in stocks. Have you ever wondered how to invest in stocks? It's not as difficult as you might think. With a little research and some basic knowledge, you can begin investing in the stock market and see your money grow over time. This guide will walk you through everything you need to know to start investing in stocks. Step 1. Determine your investment goals. Before you even begin investing in stocks, you need to determine your investment goals. Are you looking to grow your wealth over the long term? Are you trying to generate income? Or are you hoping to achieve both goals? Knowing your investment goals will help you determine what types of stocks to buy, and how much risk you're willing to take on. For example, if you're only interested in long-term growth, you may be more willing to invest in higher-risk stocks. On the other hand, if you're looking for immediate income, you'll probably want to stick with safer, dividend-paying stocks. Step 2. Choose an online brokerage firm. Once you know your investment goals, it's time to open up an account with an online brokerage firm. This is where you'll buy and sell stocks. When choosing a brokerage firm, you'll want to consider things like fees, account minimums, and the types of investments they offer. Step 3. Decide what types of stocks to buy. Now that you have an account set up, it's time to start buying stocks. But before you start buying random stocks, you need to decide what types of stocks you want to buy. There are two main types of stocks: growth stocks and value stocks. Growth stocks are companies that are growing rapidly. They often don't pay dividends, but they offer the potential for large capital gains. Value stocks, on the other hand, are companies that may be undervalued by the market. They often pay dividends, but they may not offer as much upside potential. Most investors choose to diversify their portfolios with both growth and value stocks. This helps reduce risk while still allowing you to earn profits. Step 4. Research each stock before you buy. You should always research a company before you buy stock in it, like looking at financial statements and reading analyst reports, as well as keeping up with news stories. The stock market is one way you can invest your money to grow your wealth over time. However, before you get started, it's important to do your research and understand the risks involved. This guide has given you everything you need to know about getting started with investing in the stock market. Now that you know what you're doing, it's time to get started and grow your portfolio.